OKX and ICE have launched a new product, perpetual oil futures contracts based on Brent crude and West Texas Intermediate (WTI) benchmarks. These contracts allow continuous trading without expiration dates or the need for physical delivery of oil. The move brings traditional energy market benchmarks into a crypto-native trading environment. OKX, which has 120 million users globally, will offer these contracts in regions where it already operates under regulatory licenses. ICE will provide the pricing data for the contracts, ensuring alignment with widely recognized global oil market benchmarks. The partnership is part of a broader initiative to integrate blockchain and tokenized trading systems into traditional financial markets. The contracts will be available only in jurisdictions where OKX is licensed, reflecting a focus on regulatory compliance. Haider Rafiq from OKX said the move responds to demand from market participants for broader access to energy benchmarks. Trabu Bland from ICE added that the new contracts will reach a large retail trading base. The perpetual nature of the contracts means traders can hold positions indefinitely, without the need to roll over or settle. This is a significant shift in how energy commodities can be traded on digital. Most people arrive after the move is obvious and the easy upside is gone. We focus on serious crypto education and high-quality signals before the crowd rushes in, so you can understand the setup earlier and move sooner. If you want that edge, visit the link below now. Platforms. The initiative also highlights a growing trend of traditional financial institutions collaborating with crypto-native platforms to expand market access and product offerings. The contracts are based on Brent and WTI, two of the most important oil benchmarks in global markets. These benchmarks are already used in futures and swaps contracts traded on major exchanges. By bringing them into perpetual futures contracts, OKX and ICE are creating a bridge between traditional commodity trading and crypto-based markets. The move could attract traders who are looking to hedge or speculate on oil prices without the logistical complexities of physical delivery. It also aligns with OKX's strategy to expand its perpetual futures product suite into new asset classes. The contracts will not expire, which simplifies the trading process for users who may be unfamiliar with the complexities of rolling over expiring futures contracts. This could lower the barrier to entry for new traders looking to engage with energy markets. The mechanism behind perpetual futures is designed to maintain alignment with the underlying benchmarks by using a funding rate system. This rate is adjusted periodically to ensure that the contract price stays close to the spot price of the underlying asset. This is a common feature in crypto perpetual futures and now extends to oil, making the product more accessible and familiar to digital asset traders. The stakes for OKX and ICE are significant. For OKX, this is an opportunity to diversify its offerings and attract traders who are interested in energy markets but may not have access to traditional futures exchanges. For ICE, the partnership is a strategic move to expand the reach of its benchmarks into a rapidly growing segment of the financial ecosystem. The next signal to watch is whether the contracts see. Most people arrive after the move is obvious and the easy upside is gone. We focus on serious crypto education and high-quality signals before the crowd rushes in, so you can understand the setup earlier and move sooner. If you want that edge, visit the link below now. Significant trading volume, and if OKX and ICE announce plans to expand into other commodity benchmarks. The success of this product could pave the way for similar offerings in other commodities, further blurring the lines between traditional finance and crypto-native markets. The broader partnership between OKX and ICE could lead to further product innovations in the future. If the perpetual oil futures gain traction, it may encourage other exchanges and traditional market players to explore similar integrations. This could ultimately lead to a more interconnected financial system where digital platforms play a central role in trading traditional assets.